Right there. So this is the weekly low, and this is the weekly high. And what I was saying was what you might have if we are to trade higher, what you might have is Asia open up and take out some of these lows in here and then trade higher for the week. Sorry. And if Asia wants to go lower, what you'd have is Asia would open up. I mean, if the week wants to go lower, what you would have is Asia open up, take out this low, London come for this high, and then New York come down and target some of these areas below. So the closest high or the closest run on liquidity right now, where we currently are, is these highs. And what we know is after these highs are taken, we have a huge shift to run some lows. So this is what you want to pay close attention to when we start the week. You want to see we're in this range of this high above and this low below. So you want to gauge or get some sort of idea of where we could be looking to target and run based on what happens the minute Asia opens. So we'll we'll revisit this next week. Well, Monday even we'll revisit this to see, did we take out the weekly high, and does that mean that now we're looking to run the low? Um, there are daily highs and lows in here. If you look over here, we have these daily areas here. So there is a daily high that's outstanding that we didn't grab yet, right here at 902. There's, yeah, that high there. So there's a possibility that we trade up above that high and look at what's above it, this zone. So we can trade above this high and then go down into this zone that it would create trading up above that high. So if we look here, we have this zone that's above, right? In the event that we trade up into this zone, guess what happens? That means that we end up taking out this high right here, right? So the minute we take out that high, this down candle or this zone becomes validated. That's swing points, right? So if we trade up above there to take it out, then now we have a fresh zone below from the daily time frame that now gives us 30% of the daily, 50% of the daily, and 70% of the daily zone that was created. And what you can have is the first day we reject out of here, Monday, and we have a shift down. Tuesday, we could bounce on this 30 and then trade back down into here. Wednesday, we could bounce on this 50. And the same day, you could bounce on the 50 and trade down into here. Where the end of the week, we have a tap into here. And that runs these highs on the inside and gives us a huge push back into the top of the range, because this would be the bottom of the range. And it can do that across a few days, just trading above to validate the zone, and then having multiple areas to come back and tap into, while we end up with whatever they call it, an inside week or a range week, whatever it is that they explain it to be. It's literally just this. These would be the predetermined areas that price would give intraday reversals from, based on capturing one daily area and seeing how the rest of the week plays through those areas. So if we do open up and we trade up above this high, that validates this down candle, and now you guys have higher time frame areas to pay attention to throughout the week. Even if the week is going bearish, you guys now have intraday reversal areas that price would give you strong reactions out of. So if you're short and we get to one of these areas, you don't want to stay short, because there's the possibility of swinging back up to, take you out of that short. You don't want to be entering a short at these levels, knowing that price can tap into this level and give 50, 60 points from it. So you don't want to be shorting some 1 minute zone down at, let's say you were shorting here at 90. You were shorting a 1 minute zone at 90 to go down, but then you didn't know what was at 90 and it bounced you up and then traded down with your bias. So this is how I forecast for the next week. This is how, I'll prepare. I might look at the daily time frame once the week starts, and then I'll just stay on the 1 minute for the rest of the week. But that daily time frame, once the week starts, gives you an idea of major areas that you can look for price to reverse from when it gets there. It can get there Tuesday, it can get there Wednesday, it can get there at the end of the week, it can get there on Monday. But you still have these higher time frame areas that can give you an exponential push out of. So this literally just becomes the top-down analysis prior to the market even opening. The power that you have that's just resting inside of understanding this dynamic. The minute we open up and take out the high, we know where we're rejecting from, and we know where we're having areas that we reach into for a potential reversal out of. And even if price comes down to target the weekly low down here, let's say by the end of the week, we run the weekly low. Let me just change these colors here. Gonna make it pink. The weekly high and the weekly low is pink. Even if price ends up trading down to the weekly low to run it by the end of next week, there are these areas that are here that price will still stop and respect. Even if it's momentary, we'll still stop and respect these areas until we get down into there, and then we'll know whether the weekly low is the target for the end of the week. If the weekly low is ran midweek, then we know that once we get the run of this weekly low, we wait for price to take something, right? So once price takes something, we know that there's an exponential push coming out of that area, right? So all we do is correlated with whatever zone is below the run or the draw on liquidity. We understand that we could use that zone for the move back into that previous range. So we have this zone below us. We have the beginning of this imbalance. So the beginning of the daily imbalance, there's probably like a 4-hour imbalance in here or something like that. We know that we can trade into here and get a huge reversal going back into this previous area up above the minute this weekly low is taken. So once we get below this and we're trading into here, no one should be short anymore. Now everybody should be looking for price to reverse. So we do the same thing on the 1 minute throughout the week, but if you do it on a higher time frame, the context from the higher time frame that's given, it's very, very hard to be on the wrong side of the market if you're just using it from the higher time frame. Very hard to be on the wrong side of the market with all of this. Let me just put this here because there's this down candle that I'm seeing here. That's in the 70% right there. Right there. It's in the 70%. So we'll see how the rest of this week plays out, but you guys just got yourself a top-down analysis, and that should be something that you look forward to. So this is forecasting into the future. That's essentially what this is doing. Now, let me say, even if we end up taking out this high above right here, all you do with these areas is just move it up to here. And now the 30% of this inside zone down here is just the 50% of the larger zone that would be created should price trade its way out of here. And the 30% just becomes the top of the zone here. But it'll show itself to you guys as price trades through here. So I'm gonna leave this here. If you guys want to take a picture of it or mark it up on your own, these are just scenarios for ways you can trade next week. All right. So you know what? I should actually use the 4-hour. Yeah. So I'm going to go back to, let's see. March 2021. Let's see if it'll give me the 15-minute of that time frame. Oh, no, it won't. So let me go as far back on the 15-minute as I can then. So I'm going back to February. This is back in February. And let me play it through a little bit. Because now that I'm on this 15-minute, I should be able to go to the 4-hour And I'm only gonna go between the 15 minute, the 4 hour, and the daily. Now the moves that we'll be looking at, it's the same stuff on M1, but I'm just using this um, so we could have more data. So there's the 4 hour. Let me go back to the 15. 15. Okay, so it's giving me the 4 hour and the 15. So now we could incorporate higher time frame areas that we couldn't do in the 1 minute, last week. So here we are. Here's a 4 hour area. Wow, we were down in the 12,000 during this time early in the year. That's crazy. And we're all the way up to 16,000 right now. Wow. That's a lot of movement just to that upside. Um, but all right, here we go. So we're in the 4 hour area. We're in this 4 hour zone. What are some things that you guys see? For you personally, I'll show you what I see, but let me know in the comments some things that you guys see yourself. So I'm going to mark up what I see. I see that we just took this low right here. Let me make this white. I see that we also have this zone here. Because you guys got to open up the chart and be able to see something too. Because if you don't see what's happening, if you can't make out what's happening, then that's something that could essentially ruin your trading during the day. Yeah, sorry. Um, so the first thing I'll do is this, just to account for price running lower. If it ran lower and I did not expect it to run lower, I still account for zones that are just below it. So we have that high there. Um, did we tap into the 30% of this yet? Yes, we did. That was a 30% tap here. So we also have this 50% and 70% below down here. Should we end up diving down into this area? Now this looks like a 1 minute chart, but this is a 4 hour chart. So let's see. You have we just took out this inside high right here. Let's take it to the low here. Let me just change the color on this. This is green. And you guys can go back on your chart as well to this date, because it's not going to mess anything up. This is January 31st, um, 2023. So if you go back on the replay function, um, this timeline, this time frame, and where we currently are now, you'd be able to travel in and out of the 15 and 4 hour. You just can't go below the 15 minute. So we're gonna have to stay on the 15 minute, using the 4 hour as our like higher time frame chart. But it's January 31st. So now we know we have these 4 hour markings here. This is the 15 minute, but this is also how the 1 minute shows itself too. It's fractal. So everything that has the potential to happen on the higher time frame, on the lower time frame, it happens on the higher time frame too. Um, Let's see. So now we're at the 15-minute, and this 15-minute would be as if we're using the 1-minute chart to trade with. So what do we see here? What I see is price mitigating an area multiple times. This would be as if I'm on the 1-minute chart. I start marking out this way. So I see we're mitigating an area multiple times. This is the 4-hour, this 4-hour zone that we have here. That's where these green lines come from. And I'm going to take this here and just make this a different color as well. Make this yellow. Did I already make one yellow? No, I didn't. All right. So we can act now as if this is a 1-minute chart. So we could already have our ideas of what we're willing to do versus what we're not willing to do in terms of trading. So we took out this high. We have the 30% of the zone here. We're also mitigating this area multiple times. Let's put this here. And I already know that if I want to take an entry from any of these areas, this is the 15-minute. So if this was the 15-minute, then I would need is it the 30-second chart? Let me see. That's divided into 4. Then I need to do 5 times 4. 20-second. So if I'm using the 15-minute, I need to use the 20-second chart in order to find the S&D responsible for the break. In order to find the S&D responsible for the no. No, I can use the 1-minute. I can use the 1-minute. So I would be going down to the 1-minute to look at the 1-minute chart when we got into a 15-minute zone. All right, we just broke the high to the left, so we might have a pullback. Yes, that is true. We broke the high to the left and closed right here. Broke the high to the left and closed. So for me, what I'm looking at now with this entire setup is that I see us mitigating an area multiple times here. See that we can get back down here and trade up again off of it, just off the nature of mitigating this area multiple times. I see that if we grab this low here, we have an area where you could see a bounce off of it to trade back up within the range up above here, or even potentially up above this wick high at 123. Yeah, up above that wick high at 123. So actually, let me just get rid of this and we'll start playing the backtesting tool going forward. I do like that we have a lot more data to use right now, so that's a plus. So any event that we get down here, I'm gonna start looking for a long in here to potentially, just a quick long out of here. But I have my sights on price running this low and trading into here. or even a little lower, because this is the 50% of the larger zone. So we'll play it forward now. Mind you, these are 15-minute candles. This is Asia now. Now, should we run this high, it's a possibility that we take out this high and then trade down to this low here. There's a possibility that there could be a short coming in from here as well. I just get in on what the market is doing. I don't try to force shorts or force longs. Um, is there a place to type in the data to have pop up? Yeah, there is. Right down here. Um, right down here, you should see a calendar button here. Little square with an arrow inside of it. You click that and then but make sure you're on the 15-minute time frame when you click it. And then you go all the way back to the it'll pop up like this. You go all the way back to January. We're right here on the 31st on a Tuesday. So just go back to January 31st and you'll be able to get to where we are. All right, so click it forward. This is coming out of an up-down candle below. There's a little 15-minute imbalance inside of here. I'll see how it looks if we tap into it, just to know whether I would take a long on it or not. Because the long from here could take you up into these highs here. But we'll see. Let's go forward. Still making our way up to there. Is anybody taking a short out of here? Anybody made up? Because you got to know this beforehand. Whenever you see all of this written out already, you have to have some idea of whether you're going to go short or not, whether you're going to go long, and where. That's very important. Where. Trading away from a higher time frame high. Well, that was set in Asia, so that's fine. Trying to figure out if I'll take a long out of this imbalance just based on what's happening here. It's a little up down candle it just tapped into. Let's click forward and let me just. Okay. So tapping into this imbalance below would be us sweeping these lows on the inside, tapping into it, and having a push off of it. Granted, this is the 15-minute, so these reactions are going to be a lot stronger than the 1 minute. But these reactions will take longer to happen if you're using the 15-minute time frame. It take longer to happen intraday. Just don't look at the numbers on the right. Yeah, not paying attention to that. So obviously, Asia moves within this tight range. This is just the Asian range right here. From this high up here to this low down here. This is just the Asian range that we're currently in. So as you guys can see, back in January, on January 31st, this range was a 38-point range for Asia. Ooh, there we go. Traded up above it. Did we get above this high too? No, we didn't. Let's see if it takes that out. Just snaps it. This is looking like it could get ready to go short. We could end up taking out 18, popping back into here, and then back down here. So I wouldn't be targeting this. I mean, I wouldn't be taking this imbalance as a long anymore because we already took out this high. So us taking out this inside high and me longing from this imbalance would essentially be me looking for a quick counter trend before it drops into here. Um, so I would no longer be shorting from this imbalance now. I mean, longing from the imbalance, sorry. So that's a nice rejection out of there. You look, this rejection would have already been a pretty good amount trading away from this zone. So there were two opportunities. This one gave 8 points. This one gave 16 points out of here. Woof. Tapped into an imbalance below. There's a tiny imbalance inside of here. That's why you saw this wick up. But again, this is no lows violated as of yet. It's a 15-minute low. 15-minute wick that shifted below these lows. But on candlestick structure, there is a possibility that we come back, tap into this to in turn short further down into here. So whoever took that short out of here, that's certainly working out well for you, especially being that we're in the top of the range as well. And just this alone, there's a possibility that these highs here are gearing up to be considered equal highs, which takes out the low below here. Not saying that that's happening now, but I'm saying that there's a possibility that that may be the narrative that's currently being built. Beautiful. Oof. Traded up above this inside high right here. So it could be looking for this here at the top. Up here. So is anyone shorting after that high is grabbed? I'll say 169. Might be a good area to snag a quick short in, but you see these lows are holding in here. Yeah, that was perfect. The candlestick structure move traded below here under candlestick structure, tapped right back in here at, at 134, and then shifted all the way down to 104. That's a nice 30-point drop from there. Rather buy after the high is grabbed if there's a retracement. Okay. Okay. I might sit out on the buying after the high is grabbed, unless we could maybe somewhere in here. I would look to buy the lower portion somewhere in here because this is still unmitigated. Nothing up here. So this high would be taken. Well, this high just got taken. There's a 30% that's there at the top. Let me move this out. There's 30% that's here at the top. I wouldn't be looking to take this here. Maybe I'd take somewhere down here as a quick reaction up. But in the event that we get back down there, I think that we would end up sweeping the lows. Yeah. Wow, that's a nice short out of this exact number here. Let me see what the OHLC on this is. Oh wow. It's 12168.75. That is crazy. 12168.75. That's insane. There goes that 30% right there. So are you, Shakima, are you buying here? So the high gets grabbed. There's a retracement back into the zone that did send price up. There's a 30% tap there. Yeah, like I said, I'd more so be looking for the lower portion of it rather than the so high up. Because a lot of the times, what tends to happen with people is this, and I don't know where any of this is going. I have no idea. I don't even remember what January, February was like. So I have no idea about any of this. But what some people tend to do is look. We grab this high, and some people see this imbalance right in here, and the first thing that people are doing is longing this imbalance right here. And if that doesn't work, adding in another entry here on this imbalance here. And I'm not saying that price can't take a high, tap into this imbalance, and then put in another high. There is a possibility that price does it, especially on days where we have this strong trend. There are days where that happens. But for me, it's still buying at the top of the range. It's still buying in a level that's not a zone for me. Yeah, I never trade imbalances anymore. Um, Now it's not saying that you can't, but I'm saying that it's just a lot easier to stick with zones. Imbalances are great, but imbalances have you in more drawdown than zones do. So um, I have shied away from that for my personal trading. I do note the imbalances that's present, but I still prefer the levels within the zone. So let's skip forward. Ooh, ooh, that was a nice shift up off of that. Y'all saw that? Look how large this move is. So coming out of the 30% right here, the 30% of this larger zone here. That was a nice little 23-point bounce off of that. Very nice little 23-point bounce. Trading up into that. And we also tapped this little imbalance up above as well. So again, I'm not necessarily interested in buying this. It's okay. Some people do. Like I said, some people end up in drawdown here. They want to see it take the high. They add another entry within here. And now they've probably averaged down to here. But guess what? With price dropping back in here, they're still in drawdown. These are 15-minute candles. So this would be drawdown for 30 minutes. I tell you, I'm not staying in minutes of somebody's drawdown. That's not happening. So we'll play it forward and move this out of the way. Move some of this up out of here. Remember, this is still looking like the equal high thing that would end up targeting these lows down below here. But we know that price doesn't go straight there at times. Let's be mindful of the time that we're in. So this is 8:15. This is 8:30. This is the 8:30 candle right here. So we are near market open. Um, let's see. Yeah, so it did have that wick that traded below the previous candle. Yes. So that would have been the reason why we got in to take a quick long. Because we shifted that low, we end up having a move up, and on the 1 minute there would have been a possibility for a quick move to trade up above the previous high. We would have had that. So yes, that's exactly true. It has the wick that took out the low. But again, this is still for many of us, or at least for me and my rules, this is still buying high for me. So so this is 8:45 candle, drops lower. The person who's trading these imbalances added one here, added one there. Oof. Just immediately dropped. Ran straight through this imbalance here. Straight through this imbalance. So this zone would have been no good. It would have just stabbed straight through it. So there was nothing on it. Well, the 30% there was, but you see this traded directly through the bottom here. So you see how people get ruined with trading these imbalances for face value, but not really understanding what's going on. We took out a high to the left with this here, and then we took out this high that took out the previous high as well. And then what? Had a sharp shift down. We're still monitoring, or which could end up being likely, paying attention to these equal highs up here, that could potentially be running us down to this low right here, this wick low. So for me, I might look to participate in this imbalance still. Why? We're trading out of a previous range. You guys see the previous range that's here? We're trading out of a previous range. There's a possibility that the bounce from here takes us back within the range. Now Nasdaq does have that three, four large candles that kind of drop, and then it starts to make its way back up. So just want to make sure that it's not this. Obviously, I'm gonna get a 1 minute and 5 second confirmation, below this. Let me see. Yes, mitigating an area multiple times. Yes, yes, yes. That's it. That's it as well. That's certainly what I'm seeing around here also. Oof. Look at the move back up into this range. Oof. So now does anything change for you guys with this large move trading back up here? Has anything changed for you? Is anybody still? Yeah, Shaz, you right on the money with that. Yeah, it's so beautiful because you don't even need a zone. You don't even need like something unmitigated for it to like come down into and hope that it holds. No, it literally holds because it's held plenty of times before. So it becomes an area where you at least have a start. You're absolutely correct, Shaz. So let's move this forward. And this is February of this year. This is where we currently are in February on the higher time frame. We're on the 15-minute chart right now. Woo! 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 That just stabbed right down in there, filled it right up. So is anybody still looking to continue short? Or are we now looking to trade up into this previous zone back here? I'm trying to look and see if we do trade up. Is there anywhere that I want to short? 177 and 200 might be a good place up here to start to look. So let me put 200 on the chart here. And let me put 177. 177 there. Okay. Now we still have this 169 that we didn't tap exactly, just came close to it and traded away. You could still see a rejection back into this zone from there. I think it'll continue to take the highs. That's possible. I did see this zone here below. That's why I moved this out the way when we were right here. And I saw a shift up with this bullish candle. I moved this out the way because we had this little zone below here, this up-down candle. But guess what this is still doing, Shaz? Still mitigating an area multiple times. Still the same thing. That tap into there, that huge push up, that stab back below in this bearish candle, where did it end? The same spot to the left that we mitigated multiple times. Another tap in. Now this is mitigating this multiple times. It just did it on separate occasions. This candle here, 10 o'clock candle, this 10:15 candle here, and now this 10:30 candle. Now this is still this above to me now right here. This above to me now looks like we could be tearing some of this up below. Just because we got these sort of equal highs up here that we're still making. Now I could be wrong though. So obviously I'm still looking for my confirmation when we get um, uh, in here, or any confirmations below that could say, okay, wait, we might be going to tap back into something up above. This imbalance still looks like good ground though. Um, but I also want to consider the possibility of just below it as well. So when I'm trading on the 1 minute, this is what I'm looking at. All of these numbers that I'm giving you guys, I'm marking this stuff out. I was calling those numbers out on Friday, on Thursday. Throughout the week, I was doing the same thing. But they're just correlated with zones that I'm seeing from the 5 second. So I'm seeing these same areas on the 15 minute. But when I'm trading the 5 second and seeing these same zones on the 5 second. But I'm just giving you the numbers of where to exactly look at them. Because the minute we get there, your move tends to happen like that on the 5 second. Very quick, like that. So I'm giving you these numbers beforehand because I'm noticing these numbers. Even if this was M1, let's say this was all M1, I'm still noticing these different areas that I'm giving you guys and what I'm paying attention to quickly get a 5-point scalp on. So let's told you that bad boy looking like it's getting ready to come down to these lows here. Just because what I was seeing up here with these equal highs up here, giving us those vibes that we're gonna take up these lows. Now, this is the same thing that I had mentioned. I said, though I have this imbalance here, I just want to take out a number just below it because there's a possibility that we go just below it and then bounce off of there. And look at exactly where it wicked form for me. 12,084. That's just the number that I was seeing. And it's not saying that we can't drop into this, because remember, we are still mitigating this area multiple times. It's more so this here, if I was being honest, that there. But a dip inside of it would just take you to here. So let's Keep going forward. Let me try to clean this up a bit. Now my charts be looking, otherworldly. So I'm not looking to be correct about where price is going. I'm looking to be correct about where my entries can start. Where I can find an entry, not what price is going to do next. I don't need to know that. Price is going to show me that. I need price to show me its hand with what I should do to take part in that move. So let's click forward. Look at that. Look at that bounce right off of. Look at this. Beautiful. Yes. Yes. This is the energy that I'm looking for at this number. Yes. That's the energy I want to see. You see how we took out the low, previous low? You would see this. You would see this on the 1 minute. I can't go to the 1 minute now because we're too far back for the data to stay here. It's gonna reset the whole chart. But look at this. Beautiful. This is what I was looking in this area for. Of course, I would have easily found something to get in with that. But beautiful. That's what I wanted to see. Let's move forward. Look at this bad boy. Look at this. So, I don't need to be right about, oh, this low is going to get taken, or maybe this high is going to get taken, or we're going to draw the liquidity from up here. We can go into the inversion of the. I don't need to do all of that because my move. I'm looking for where my entry could start. Looking for where my entry could start. And then I'm going to play what the market is showing me, play the hand of the market. What's the hand of the market? Well, why did this down here occur? First of all, even though we're at the top of a larger range, we're at the top of it. Yes, even though we're at the top there. The hand that I'm looking for is what? What did we say we were doing over here, Shaz? We said we were mitigating an area multiple times, right? So when we're getting that kind of behavior, what do I tell you guys all the time? All the time about the common occurrence that takes place after that area is violated. I said anytime we violate the S&D that's getting mitigated multiple times, anytime we violate that area, we get a trade below it and then right back into the range of it. Right back into the range of it. So what do? We were mitigating this area multiple times. We got a violation below it. And then what? Right back into the range. So it's the same stuff over and over and over. And this is the 15-minute time frame that I'm laying this out on. But even though it's the 15-minute time frame, it's still doing the same thing that we mark out on the 1 minute. The 1 minute is just doing it faster. This is just doing it slower. So now, if you look across here, mitigating this area multiple times, shift down, violate it. All we're doing is violating this area and tapping into another one. And in the event that we come down and violate that one too, guess what? We violate in that area and tapping into another one. So now you guys, sort of have the understanding of I don't care about whether we're bullish or bearish. I don't care about being bullish for the session or being bearish for the session. You know what ends up happening with that? We end up forcing a bias. Oh, the drawn liquidity is there because we have this certain session here that we're targeting that. And then when we get that, then we see, no. Look at what the market is doing and follow the market. Follow the market. And once we have the ability to follow the market, then we can create entries for ourselves. We can create things that we don't necessarily need a larger time frame move. We don't need a longer move. We just need to have a good entry. And if we can trust that entry, if we can find a way to trust it, guess what? You can trust it with 10 contracts. You can trust it with 20 contracts, with 30 contracts. Why? Because when you were trusting it with 1 micro, when you were trusting it with 5 micros, when you were trusting it with a penny lot, it was doing the same thing. And you just move forward, learning to trust these setups. That's the real teacher there. Learning to trust these setups. So let's continue. Move this stuff out the way. I mean, we don't necessarily have to. We traded through this. It's the highest point that it went. This is at the 50%. You see the 30 gave us nothing. The 30% gave us nothing here. I mean, maybe it did on the lower time frame and then just trade it back up into it. So maybe it did. That's a possibility. So what are you guys seeing with this? Let me not be the one to always give away the answers, because you guys got to be able to see this when you're on your own as well, so you don't take so many bad setups. What are you guys seeing? I now see this down move here. This down move here that we just traded up above and validated. I also see this last up move that we came out of, but I'm not necessarily using this last up move to gauge an entry or to build narrative. Guess what I'm building narrative with? This here. We traded below this and we've been mitigating this multiple times. So my narrative is that we're potentially looking to trade back into here. Now, do we just trade through here? We won't know until we get through there. But we know that there's a possibility that we trade out of here, back into here, maybe out again, then violate it. And then after what? After we trade above an area we've been mitigating multiple times, what do? Trade back into it. So my narrative is coming from there. Let me click forward. So you see that we had to run up into there and then a quick shift back down, and then we traded back up. Now, with this candle that often forms here, you guys see this hidden S&D? A lot of the times when this hidden S&D forms, especially after we've just taken out a high, a lot of the times what you see is you can get the next candle trade up above it and then violate the low of it there. Or you can just get the next candle to go bearish and run that back into this zone here. But we'll move forward and see what price gives us. It can retrace to the latest move and continue taking lows. It violated, then pull back. Okay, so up here, you believe that it'll retrace to here and then pull back? Or are you saying that it could retrace down into here and then trade up to there? First or second scenario. Now, I do also see, let me point out this up down candle that's in here, just to take the lower portion of it and say, yes, there's this up down candle in here. With this imbalance inside, we just closed above the high of it. You could get a tap back into here and then a trade higher. Okay, the first scenario. Okay. Woo! Woo! Look at how I put what was this? 121 14325 14325. What is this? No, 14375. And look at how the high of this candle. I have 14375 there, and the high of this candle is 14350. They just won't let me be great. Just won't let me be great. So look, we trade up above, we form this candle, and I gave you two scenarios. I said we could actually take this high out first and then shift down, or you could just see us go straight down below this low. Just based on the context of where this candle formed after doing what? Taking out a higher time frame. High. So now let's take this out here. We see that we're at the 30% of the last down move. You see that in the last down candle as well, you see that we've tapped into a higher time frame wick. That's what this up down candle is. You see that we've also tapped into an imbalance to the left here. And we haven't really got too far into the up down candle. Usually it's like the 50% of it that we tap into. Let me just mark this out. So we could see what the 50% looks like down into here. And maybe that'll just be another tap onto this zone here where we're mitigating it multiple times. Who knows? But we'll see. Let's move forward. Let's see what happens next. So we tap into 30%. You see how the person that took the imbalance, they're in drawdown. Now you see why I said I stopped taking imbalances. Not saying that they don't work, but they just create more drawdown for you than the zones will. They just create more drawdown for you. Will you point to explain the reasoning behind your level, the pink arrow? So that's this level here, this right here. Is that the where I drew it from? Are you talking about this where I drew it from? So that's where you got that level from? No. Yes and no. Yes and no. Um, I did get the level from this candle here that we've been mitigating multiple times. Trading away from. I did get it from there, but the pinpoint 143.75 is actually just the last up move right there. So you see the bottom of this wick at 7:15, the February 1st, 7:15 candle. The bottom of that candle to the top of the 7:30 candle on the same day. So it was literally from that spot that let me just move it across from this spot. So you see exactly where it begins. I expected that we would tap onto the beginning of the zone. Even if I feel like we're going to trade back into it and then reject again, oftentimes we do get the beginning tap of the zone. So I was just anticipating that. That's where I begin to, look for that move. Yeah, right at the beginning tap of there. So the reason you cut through candles to get the level is because it broke lower out of the recent range. So what it would the reason why I'm even drawing this here in general is literally because the minute we traded below it, we had a tap back in with this fractal here, and then this fractal is the thing that held price the entire time. So we have a bounce there and then we trade out of it. We have another bounce there and then we trade out of it. We have another bounce there and then we trade out of it. We have another bounce there and then we trade out of it. We have another bounce here and we trade back into it and then slip out of it again. We have another bounce here. We traded out of it. We have another bounce here. We traded out of it. We have another bounce here. We traded out of it. So what does that say about this zone in general? It's a strong zone. It's a zone that's rejecting price multiple times away from it. So if we trade down and we begin to make our way back to that area, we need to understand that this is an area that you should not be longing in because this has been previously rejecting things multiple times to the left. So there's a possibility that you get up to this, there's another rejection coming out of it. So that's pretty much my reasoning behind it is just something that I've seen more times than not. Literally just using narrative. So let's continue. Oof. Y'all see that? Y'all see that bounce, baby? Bounce with me. Come on, y'all. Y'all don't heard Shad Moss. Y'all see that? What do we say? The 50% of the up down candle. That's what this black line is here. The 50% of the up down candle. Guess what this also is? The 50% of the down move as well. But the 50% is what I often see, nice bounce off of. So we get that at the 50%. Let's see what we get out of this. This would have been a perfect move anyway to be able to take you right up to the upside. Now, I'm doing this candle by candle on the 15-minute. Granted, it takes 15 minutes for this candle to close and complete. So That's why I said I don't like trading the higher time frames because it's a sleeping bag time frame. You're waiting so long to, see what the next candle potentially is going to do. So from what I see, this is the same thing as before. We violated the low here, just like we did down here. We violated the low here and tapped into a level and then shifted back up above. So what that may let me know is that the high of the previous candle is potentially going to be violated because we failed to trade below it. We failed to trade below the candle, the high of that candle that put in the low of the same candle. So what this ends up being on a 1 minute time frame, this ends up looking like a double bottom or equal low that failed to trade lower and potentially might be looking to take out the high. With by the way, say this now before you think it's hindsight. With a hidden S&D that I'm expecting to get violated. So let's go forward. Candle gets taken out. Guess what this is down below, right here. Coming back to this low here. That's taking out the S&D responsible for the break on the inside. I told y'all when y'all see this candle here, the previous candle runs the low. The current candle runs the low of the previous candle and then trades back in and flips bullish. That's what y'all hear the requirement? Flips bullish. What that's doing is the following candle, the third candle that opens up, that's often tapping back into the S&D responsible for the break. And then you get higher prices from there. Oh, I know y'all gonna be begging for this video. So look, hidden S&D, what we mentioned was right here, right? So you see why we're getting a rejection out of it. Here. Another one forms. I mean, this one formed here too, but another one forms here. And that's where, for those in the premium section, case study on candles come in. We said we expecting to get this to get violated, right? Yo, I don't remember what was on this day. This is February 1st, 2023 at 2 o'clock. I don't even remember what happened this day. This is not even hindsight. This is something that we see moving forward, and we're building the narrative. We're building the narrative in real time around just clicking forward on this. I think I don't know if I started the video. I don't know if I started this video when we started the back testing part, but we don't know anything that's happening on this date. We went back to a random date, random time and place, and we made sure that the chart was zoomed out like this, so we had no idea what was actually going on. We know you do this every day. Yeah, you're right. You're right. So look. Remember what I said about the rejection? I said, even though I was expecting a rejection here at the beginning, I'm also expecting one inside here that could take us back out. This is narrative building. as to why I'm even on this side of the market. So we get that move back up, back into here. We have the potential of this being violated. This is an area that's been absorbing price the entire time. We have these other areas up above that we drew. Now, anybody else that's here, are you guys staying long on this now? Are you guys, you know, looking to short from here? What are you guys seeing, especially when you see this? When you see this happen, when you see, like, you open up the charts and this is literally what you see. You don't have my markups on it or nothing. This is literally what you see. What are you doing when you see something like this? What are you considering for what price potentially may do next? Now we're at this 1:30 or 13:30 hour Eastern Standard Time. Obviously, we're up here like this. You open up the charts. You're ready to take, trades. What are you seeing from here? No low taken on the zoom out. Good observation. Yeah, good observation. It looks bullish to me, zoomed out with no markup. Same here, same here, same here. So now we have this zone below. Let's move the rest of this out here. And let's redefine what these areas are below. So we tapped into this down candle. You see this shift out, putting another high off the down candle. We have this zone here. What do we have within this zone? We have another down candle here, or down move per se here. But look at what already happened with this down move versus the previous one that we had marked out. With this down move, what you see is we trade right up above it. Price taps into the 30% and trades up to this zone up here. So let's mark out the little things that we need to be able to get a sense of what price is reaching back into. So I'm going to take these two areas, and then I'm also going to mark out this down candle. Why am I marking out this down candle? This on the lower time frame is the S&D responsible for breaking the high. It's shown as a 15-minute down candle, but for 15 1-minute candles, 15 bars, for 15 1-minute candles, price was going down. For 15 of them. And the next 15-minute candle opened and price traded up. The following 15-minute candle that you have here, after we traded up above here, you see with this 1300 candle, 1315 That candle opened up, tapped back into this previous down candle. You see this wick here? We tapped right back into it, and then we traded up out of there. So, would any of you guys forfeit this down candle because it's already been tapped into, and then potentially mark out this fractal here? The fractal. Is that a common practice for you guys to follow these zones this way? Or do you guys just consider down candles S&D responsible? Okay, okay. So let's play it forward. Woo! Now y'all. Woo! I don't even let me actually go back on this candle and see that open up again. And what time is that? 13:45. Okay. So this opened up. We traded up into here, and then we traded down back into here. That must have been some large volume showing up on the 1 minute. So now we have this move. We traded up, traded back down, and then closed here. Something like this, oftentimes, here's what I do. We have a large candle like that. You guys see me take the two ends of that large candle. And the reason why you guys see me do this is because if this next candle opens and trades out of it, that's the zone. It's the bullish zone. If this same next candle opens up and trades below it, that's the bearish zone. Whichever side it chooses to trade out of, what just happened is the next zone. So let's click it forward. Oh! What was that? Yo, y'all see how large this candle is? But if you zoom out to the larger picture of things, yeah, that gotta be news. It gotta be news. Yeah, this is 2 o'clock. 2 o'clock. 2 o'clock. Everybody was right. Yo, but look at what we mentioned. Let's go back for a second. That's lovely. Let's go back for a second. So outside of this area, what did we mention? I said up here is where I'll potentially be looking for my shorts, right? And then I said that we're mitigating these areas multiple times. So when we get back here, I said, though we violated this one here, mitigating this area multiple times, violate, trade back into it. I said, this is an area where we're mitigating multiple times as well. And so is this area here. So you see these two green circles that are here, noting that you could potentially have another bounce in these areas. So the next candle opens up, and let's look at what it does with direction. The next candle opens up and shot up first and traded down below. Y'all see that? It rejected first out of up here at the top of the range. It rejected first out of them. I'm going to play it again. Play it two more times just so y'all can see. Shot up and then rejected down. You see there's a huge wick there. Let me actually just change the colors of the wick just for this move. I'm gonna make the color of the wick pink. So watch this next candle. Look at up here in this circle. Watch how there's this wick as there's this large bearish body down here. And then it trades back up above to here. So that's that little whipsawing thing they get with FOMC all the time. Now watch this. Pink wick, body down, and then body back up. So the rejections that I'm paying attention to here certainly rejected down and had a huge drop. And then what? We came back to here to mitigate the area again. A second time. Not a second time, sorry. I think there's 1, 2, 3, 4, 5, 6 times here. And what did we say about here? That we'd be expecting price to trade up above this because it's an area that is being mitigated from, it's being mitigated multiple times. So both things happen regardless of if I waited for the short or waited for a long below. I didn't need to find an entry going there, and I didn't need to find an entry going down there. I didn't have to find an entry going up or going down. All I had to do was wait for it to come to me. Bottom of the range, top of the range. Bottom of the range, top of the range. Bottom of the range, top of the range. You guys hear that? Bottom of the range, top of the range. So that was, let me actually go back and change the candle color back. Black. Oh no. White wick. just keep both black. So that's what we got. That's what we got here. So now, what do we have? A new range created below. Because we closed up here. It's a new range created below. From this high down into here, and then we trade it back up above to here. Now, I know some people might ask, what about when we went up above and that established this zone, and then we traded down and violated it right there, and then we traded back up above? So that just changes it to where price closed. Closed bullish above this high. It's a 15-minute candle. So now we do the same thing we've been doing everywhere else. These ranges just become a lot larger. So these ranges, now you're actually sacrificing. Let me put this, there's this wick down here. These ranges, you're actually sacrificing more risk. There's more risk involved in these ranges because the ranges are now larger. But let's delete this here. And now we look up above and see what's present up here. Now, what do we have here? We have this last up candle right here. Let me make that red. We have traded below it, tap back in, shifted away. So we have some highs that are in here, both here and here, which I think could potentially get grabbed before pulling back. So that's what I have above. Already marked out these areas that we have below. Let me just turn this green and move that. All right. So now we have these zones. These things down here still count. These are not things that you move away until violated. These still count. So let's move forward with this. This is price trading back into the zone here. It's probably at the 50% already. I mean the 30%, sorry. Let me just make this white right there. Move some of this stuff out. Still shorts coming out of this area here. Woo! Yo! 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 This is so like I mentioned like I mentioned, these still count. These areas still, so we tap into this one. See? Now we trade below this one here. Let's just change up the colors. Now we trade below this one and tap into this one here. Jeez, man. Like I said, we come up and grab these highs here. What's grabbed? Yo. This is some beautiful stuff. This is back testing. I don't really back test these days because obviously now I don't necessarily need to because I think I've remembered a lot of the market. A lot of the things the market does. I remember quite a bit of it. You know what I haven't been paying attention to? What did I mention was down here? Remember that 4 hour area that we talked about? The 4 hour high we traded up above right here? Look at what FOMC tapped onto. FOMC took the 30% of this larger zone that we originally drew out right here with this in the beginning of the backtesting. We tapped right onto the 30% of this area and immediately left from the 30%. I didn't even remember this was here because all of these drawings and stuff like that we had drawn out here. But this is the higher time frame down move that we originally drew out from the 4 hour. That FOMC, even though it traded up above, look, it came right down to, tapped it, and then quickly left. Quickly left. So now we have our S&D responsible here, which is a larger one. And then we also have our institutional demand present. And mind you, this is the 15-minute chart. If anybody is new coming into the session, this is the 15-minute chart. Do we have anything back here that we want to go look at, or? So it looked like the 4 hour traded us up into this imbalance. I probably want to see us get up to here. This looks like 50% right there. So let's head back to the 15-minute. Obviously, we know the 4 hour just gave it away that it's going to travel just a little more, just a little higher. right here at 523. So it gave it away. Anytime you go to the 4 hour, it just fills out the rest of the 4 hour candle. So this is what time? So we still got some time to make it there, even if it's not straight. Let's see. So remember what we mentioned about this candle here. It's the possibility of trading below there, but since this is a large candle, there's a possibility of ranging inside of there. So let's go forward. So we traded up above, came back in, back up above. Traded back into it. Is anybody taking a long from here? Even though we see that price trades up above this, what area would you be looking to long to continue? Would it be waiting for this imbalance? Would it be waiting for the imbalance up above it? Or would it be within this fractal that's present here? I think I'd like to see this low grabbed and then look to take something up. That's what I would personally wait for. Um, okay. Ooh, looked like Michelle was the only one that was right here. She said, "Yes, I'll take the fractal." It's beautiful because this just ends up looking like a down move on M1. This fractal. It looks like a down move on M1. And there goes that high put in. I'd still be looking for a move in here. Waiting for these lows to get taken. And obviously now this is back to Asia. So you scroll back through, nobody's really trading this time until London. And what does Asia look like is gearing up for? When you zoom out and you're on the 15-minute, Asia's looking like equal highs is getting ready to take place, which brings it back down below. And as you guys know, I'd draw something like this. Because that's what it looks like it's forming. Thought we at least take this inside low here, but that's okay. Trade it down, tapped into here, and then trade it back up. Would anybody be longing out of this now? This zone right here? Since this is at the top of the range, I would not. I would certainly be waiting for us to get in here to potentially trade back up and then back down like that. Because then this would be a 15-minute low ran. What is this? This is London still. Nice little bounce off that imbalance. Now we up into that zone up there. We said this is the 50% of it up here. Yeah, I guess this would have just been a trending morning. Yep, this is 9:30 open. Oh, let's see if 9:30 swings and then drops down underneath this low here. 6:45. Let me actually see where the 30% of this zone is at too. So now we're there. This is New York kind of volume. Jeez. So it didn't take the low. It came down to it. It looked like it was. So I said, let's see if it takes this low here. It didn't even take it. Just made an equal low there. Woo. Woo. Could be an impending rejection coming here. So if the 30 gives us nothing, are we expecting 12,881? Let's find out. Yes, sir. Ma'am. Beautiful. So what this type of momentum looks like is if we keep this intact, then we take this out. And these are the days where everybody's like, short, short. No, it gotta go short, 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 short. They just raised they just raised the minimum. What they were hiking the rates to. It gotta go down now. The Feds are gonna crush the market. The VIX power and it gotta go down. And they're just shorting all of this here. Oh boy, I had a tough day because we took out the weekly whatever to the back, and I saw the SMT divergence happen, and there's all of that you hear. Meanwhile, for us, if we trailing our lows and it ain't giving us no new lows, then we continue. 70% rejection there. Woof. Tapped back into here. But I'm thinking that we can get back down to here, but we'll see. Remember what I said about the four candle drop NQ. Now they like to buy that back up. Wow, what a 1600 this was. You gotta be somebody earnings. So this is back into Asia again. So I hope that you guys learned something in this session. I ran 2 hours. I thought it would have been a little shorter than that, but that's okay. Um, hope you guys are able to learn something in this session, get an idea of what I'm thinking, how I'm reading certain things, especially with the areas that we have below here. You get a lot of days that tend to look like this. Without this large push obviously is abnormal, but you get a lot of days which begin to look like this. We were looking at entries in Asia and what our understanding was of why we were expecting an Asian high to be ran or an Asian low to be ran or whatever it is. Um, but you guys can, kind of make out that the best environment for you to be in to take advantage of what we know and what we're learning is a range. Now, granted, a trend you could still find some good movements on, especially on M1. This is a M15 trend. So M15 trend, you may not have anything coming back to give you an entry to continue. And we can't go down to the lower time frames because we'd lose all this data back here. But M1, the 5 second chart, those charts will give you opportunities to be able to get in on moves that are just pushing straight up like this. Moves that are pushing you straight up like this. So uh with us being on those lower time frames, it's a lot easier for us because we're just taking little small 5, you know, 10-point moves. Look at the scale on the side of this. Look at how large these candles are. This one candle at the end of day, right here, this one candle, 1600 candle, is 204. Am I reading that correctly? Goodness. This one candle is 248 points. 248 points at close. This one candle. That's crazy. So so when we're on the 1 minute, we're on the 1 minute. There's plenty of opportunities to still get in and take these moves that are trending up. You see, even Asia here. This was from uh, 559 down into 502. So even this Asian range was a large range within itself on that, during that time as well. FOMC always brings, a lot more volatility. But the more and more you guys apply these concepts, the more and more you guys apply these principles, you utilize the same stuff that I'm using to see the market and the way that I see it. The easier it'll be for you guys when I just draw out a certain area and put that on your chart, observe it and look at it. I don't have to be right about us going up into, 13,000, going down into 11,000. That stuff doesn't make you money. Being right about what the monthly draw was, or what the weekly area was that was getting violated that you called, you know 2 weeks ago, that stuff doesn't make you money. It doesn't. There's look at the amount of people on Twitter hoping that people buy their services because they can call these long moves from like far out. That doesn't do anything for you. What actually makes you money is knowing how to enter into this market, knowing when to press the button, knowing what you need to see. Where is price going and how can I get involved? Getting there. That's what makes you money. Nothing else. I don't care who said what from 6 months out, from 9 months out, who said, price was gonna go from there to here, and then like clockwork every week, you called what the low of the week was and what the high of the week was before it got there. None of that matters. What matters is you finding an executable move. You finding a move that you can execute on. And that's, pretty much what we've been learning throughout this month. Certainly look forward to what next month is going to bring, again, I appreciate you guys for coming out. Let me stop this recording right here.